Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, November 13th, 2018. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice here the ES has basically pulled back over the last three sessions, kind of pulling back, bouncing a little bit here in pre-market trading, but this does not appear very healthy at the moment. We've noticed that there is a higher low that could develop here that could come in off the 2700 level. This is the level I mentioned before, that with this squeeze being so strong, a pullback to 2700 is very important now and could provide a way forward to the upside. However, that level may be tested over and over here. It doesn't have to be a clean test, and we could see a push through it still. The way that we've rejected off of these highs, off the 2820s here, that still looks quite bearish, and that still opens the door to perhaps even seeing a new low below the previous low last month. So this market still looks very bearish at the moment in terms of its ability to really find a low and go with it. You know, again, it's still searching for a strong low. There has not been strong lows here, and we could still see that develop, but right now it's just not there yet. So it's still kind of in the development phase, and we could continue to see this develop for a while before we see that directional conviction that we're wanting to see. So again, at the moment, just watching 2700, 2703.75. That zone, if tested today, will be very, very important for bulls to keep bid and emphatically bid, not just barely bid, because if that's the case, we'll melt right through that level and be testing 2600 very, very quickly. So keep an eye on 2700 here early today. If we take a look at the NQ, you'll notice here the NQ looks very similar. We have a very bearish move here, a bounce with a serviceable low, not a strong low, and then another stronger drop here, another serviceable bounce but not a strong low, but an even sharper return. So far, if you're looking to see who's winning the upper hand right here, this bat down and this bat down and this initial move are very, very, very strong moves, and the bears have had the upper hand here. These responses by the bulls have been very lacking, to say the least. And so to think that this higher low here may develop and lead to a higher and a continuation very easily may not be the right course here of thinking, because again, we've had bigger gyrations to the downside and we have not been able to find any strong lows in here. So again, the market continues to search for that. And you'll know a strong low when you see it, because the market will tank, it'll hit a major area, and then it will bounce and turn around and it won't come back to that zone ever again. You either got that price or you got it left behind. And that's when you know you have a strong low, and now we may see much more higher trending behavior from there. So that's what we're really looking for here. We haven't found it quite yet. You can see down here 6200, 6150. That zone would offer a strong low. We're still quite a ways from there, but we're not too far away that we couldn't get there in the next week if this thing really wanted to. So again, how much more downside do we see? It's still very, very iffy right here. We wanted to see how price responded around 6860, 6850, 6900. This is the zone where it needs to respond, 6800. Otherwise, we could be looking at much more weakness ahead. And again, that would easily lead to new lows into about 6400 on the first pass. All right, let's take a look here at crude oil. Crude oil remains extremely bearish. There has been no upside in sight. One thing I mentioned was pre-market yesterday, a failed new high right here developing, and if that develops, we could be looking at a major continuation again. The next level down would be 57.47. 57.47 is a 50% expansion target from that key range. We have yet to hit it. So as much selling pressure as we've seen so far, we have yet to even hit the 50% expansion target. The 100% is still way below. We're still sitting above that 55 LVN. So we still have much more downside to go. So yesterday I mentioned that a rejection of 61s could still open up a move to 65s. That could still be in play. again, this market has seen no upside in sight, and so I hesitate doing anything bullish in this one until it can prove it. Instead, anything that's a pullback should be seen as a selling opportunity. Failed new highs is usually a dead giveaway, and then prior support turn resistance is another opportunity as this thing continues to trend lower. Alright, let's take a look now. Let's look at RTY. You can see RTY here, the first to sell off significantly ahead of the market. Up here, dropped, broke through the 1620s, which was really what opened up the new normal here of volatility at these new prices. 1600 has been very important. Offered through it, defended off of it, and we're back down. So really, you got to get above 1600 for this thing to start to flow. 1620, that's really going to be where this thing continues higher. Until then, here's value 1549.90. That's from all of this action here. We could see more of this type of behavior down here before anything happens. So we could again be dropping down toward 1410s now up ahead, and that would offer a strong low type of opportunity. So we don't have to turn around here. We don't have to form an inverted head and shoulder type of pattern, because again, if that fails right there, it opens up a straight move downward. This thing has been very bearish. So again, while bulls could come in and maintain, you know, strength off the 1510s as it's doing today, it needs to hold that level. Otherwise, a failure there opens up more weakness, and I really like 1410s down below. 1420, that zone is going to be a strong area to watch for an initial bounce. But even if it gets below that area, remember, anything into about 25% down offers a great trap opportunity for a push back to value, and maybe even through it. So again, all of these markets are still kind of in flux. They're each still developing, and so I would continue to, you know, deleverage a little bit, reduce exposure, and look to hold the things that you really like in this market and add to those things that you really like. All right, let's take a look here at, lastly, let's look at ZB. Now ZB was one we were talking about before, in that it could finally show some signs of strength if it can only get above the 138s or 139s, whatever we're looking at. And it failed. It failed in that zone and came right back. And again, we're still in this little box here that we formed. And again, really it's the 140 level we've been talking about the entire time, because that's the key range low, 140 here. So we have a very clear range that is formed. And again, this market has been bearish overall. It's been going downward. It has not been able to get out of that funk, but if it can get above 140 here, that prior pivot high, it opens up a move back toward 145.27 based off of our key range rules. So again, you know, will the market continue to trade down here and go lower? That could certainly happen, but if at some point it starts to find acceptance back above that pivot high and that key range low, 80% odds the thing goes across the range. Until then, we are going sideways to down, but this will give us a good clue as to a change of bias whenever that time should come. All right, that is it for now. Let's see how this plays out heading into the rest of the market. Good luck, trade well, and I'll see you in the trading room.